Good morning, everybody. Joe Ciaccio here. I don't know about you, but I'm ready for some time off with the 4th of July coming up next week. So in case I forget, which I won't, want to wish everybody a happy and safe 4th of July weekend. We will not be having a call next Monday because it's the 4th. Okay, let's talk about some annuities. Had a couple agents come to work with us and say, Joe, do you guys do annuities? It's something that we like doing. And I tried to get one of them on the phone today, yet his schedule couldn't permit it, so we're going to try it maybe in a couple weeks to see if I can get him on here where we can do a little bit of question and answers for you guys. So I want to do today is just kind of give you a brief overview what an annuity is. Yet before I start, I want to kind of tell you the first annuity I did, I was, I'm not going to say a nervous wreck, yet the gentleman I was working with said, Joe, you got to ask these questions here. It doesn't matter whether they say no. The more you ask, there's going to be time when one's just going to fall in your lap. And believe it or not, that's exactly what happened. When you do your first one, you kind of broke the ice, and now you feel more comfortable talking about it because now you've got one of them under your belt. Until you do your first one, there's a sheet that I'm going to put together that's going to have some of the questions you should ask, a little bit about annuities for you to have to where you can learn. Now, to be more proactive, as I know you guys are, is go to Google, find out what type of annuities are available, what is an annuity, how does it compare to a CD, who backs it up, which I'm going to go over a lot of that stuff today. Yet an annuity is another opportunity for you to make money. When I got in the insurance business, I said, who is going to buy an annuity from me with a final expense lead? And that clouded my visions. It clouded the way I thought because I automatically assumed final expense, they want just final expense. They don't need nothing else. That's all they sent the card in. Well, as time has changed and we've evolved to having more competition, more products out there for us, what I did starting years ago was that I started to add different things to my portfolio. And by adding different things to your portfolio was give me an opportunity to make more money other than just a final expense application. And what ends up happening when you go into a home and you say, I'm here to see you about your final expense questions you have, they can stop you right there at the door and tell you, I've already bought something. So before I go into what I would say at the door, let's talk about annuity. And I apologize for me rubbing my nose. Allergies around here are terrible in Tampa, Florida. An annuity is a savings program. It's part of an investment portfolio. Some people have money in stocks, bonds, the Dow, the NASDAQ. They've got money separated in different areas. Got some in a money market, has some in a savings account. And some people like putting money into an annuity because what an annuity is called a safety of principal. The older in age you get, people want to have peace of mind that their money is not going to be in the gutter as it is today. People I talk to, their money's 10, 15, I've heard as much as 25% in the hole due to just the overall economy. Yet if you had an annuity, you wouldn't be suffering no losses, depending on which one you offer them. They've got an index universal life, and kind of brief you on it, is that when the market goes up, you reap the benefits. If the market comes down, you make no money that year. Well, Joe, why? Why do I only make a little bit of money? Why don't I make a lot of money? Well, the insurance companies got together and they said, well, what we're going to do is we're going to offer our clients a savings vehicle that if the market goes down, we're not going to give them any losses. More people will want to get into it. The other side of it is, it says that if it goes up, we got to put somewhat of a cap on it to where the company can make money. So if the market goes up by, let's say, 10, 12%, they may cap yours at 7, 8%, and they make that 4% gap overhead, and also when the market comes down, you don't suffer a loss. When you discuss an annuity with somebody, I think about it as something similar to a CD. A CD is backed by the FDIC, Federal Deposit Insurance Corporation. So you got up to $250,000 you may put into a bank. Bank says we go belly up. That is covered by an insurance program that will give you $250,000 per account. An annuity is backed by an insurance company. And what they do is that they are going to invest the money in whatever you want, either a mutual fund, stocks, bonds, whatever you want to do. They have high risk, medium risk, low risk. So what happens that when you start talking about this with somebody, these are kind of some of the couple things you're going to be going over with them. Let's go into when you're sitting down speaking with somebody. Then we're going to kind of bounce around a little bit so you can see what I'm saying. I'm sitting with somebody and they say, well, Joe, why are you here today? I said, well, I'm here today because you sent this card in. And this card has a numerous amount of things that people want information on. Primarily, it is for a final expense program to take care of your burial insurance or your burial process. It's for people who have some, people who have none, people who want to add to it, or people just kind of curious on what it costs. Also, what the card is about changes in Medicare, your Medicare Advantage plan or Medicare Supplement plan, and also has stuff about an accidental program, a cancer plan. And the one that a lot of people are starting to talk more about is an annuity, which is something about your safety of your principal. Now, do you have any money in savings? They're going to go, well, yes, I do, or no, I don't. Let's say yes, they do. Now, you got to kind of you can't be aggressive, saying, where's your money at, how much money you have. You've got to sit and say, maybe, well, a lot of people that I do business with have asked me more questions about an annuity. Have you heard about an annuity? Do you know how an annuity works? Do you know who backs up an annuity? Do you know the benefits of somebody like you getting into an annuity? Sometimes you're going to get some savvy people and say, yes, Joe, I know what it's about. I've just never wanted one because. Or, Joe, yes, I already have one and I like it. Say, well, fantastic. Since you have somewhat of an idea on the concept of it, we've got some companies that have come out who are coming out with some different strategies to help people like you out. Now, here's some of the strategies that you will tell somebody. Somebody who knows it, somebody who does not know it, and it's kind of just like reviewing everything with them. As you know, an annuity is a savings vehicle that it works around an insurance company that backs it up, and the guarantees are this here. It guarantees you have safety of principal. I see you're 62 years old. You don't want to sit and start gambling in the stock market because if it goes up, you're happy. If it goes down, you're going to be sad. With the annuity, you reap the benefits of both. If it goes up, you make some. If it goes down, you lose none. And they look at you as if, I don't understand that. So then you got to learn how to come across with them on there's a cap, there's a portion that you get, the client, and a portion the company gets that offsets when the market is bad. Yet you're going to reap the lion's share of when the market goes up. That's probably the most advantaged part about it. Number two is that you make interest on your money every single day your money sits in that annuity. And the beauty about it is that interest is added to the principal amount. Now you're making interest on your interest as it compounds in there until you have the maturity date to where you can take the money out. Another thing that annuities have, and it depends on your age, it depends on the company that we put you with, and it depends on what your needs are, is that some companies give you an upfront bonus for you. I'm going to write a client today who's supposed to call the office, get some information, and go over with him again. He's 78 years old. I got with Jeremy at home office. We're going to give you his email, phone number on an email Jill sent to you. He's going to get a 13% bonus up front because of the vehicle that Jeremy helped me set up for this guy. I know final expense. I know life insurance. I know a lot about Medicare Advantage. I know enough to be dangerous on an annuity, yet I don't know every intricate part because it is part of my portfolio. It's not the main focus of what I do or what you guys do. So Jeremy at home office You're going to call them up, say, Jeremy, I've got a gentleman who's this, this, and this. He's got this much money. What do you recommend? Now, this is what Jeremy's going to ask you. And this is something you need to ask the client. How old is the client? How much money does the client have? How much money does the client want to put into the annuity? How long they want to keep it in there for? Is it for their children? Are they going to give it to charity? What are they using that money for? All this will be spelled out for you probably within a week of all the things that you should ask and gather this information. When you have the information, you can call me. I can help you out a little bit. Yet when it comes to the carrier, I'm not going to take any credit. I'm not going to take no credit. I'm going to transfer you straight to Jeremy, and he's going to say, okay, I see your client is 62 years old. They've got X amount of dollars in savings. They got X amount of dollars in their checking, and they want to put away this amount of money. What are they going to use the money for? How's it going to be used? If they die, who's it going to go to? So there's a little bit of a planning in an annuity. Once you do your first one and second one, it's not that hard. It's going to come easy, just like you going over a question for life insurance. Jeremy and I will guide you through the yellow brick road to get that written. Marie, that works with us in New Jersey, probably about, it seems like a year, but probably about 6-8 months ago, had a lady she was talking to, I believe was on a lead, started talking, and Marie started bringing up some of the stuff because she was practicing how to do it. Lady says, well, I've got about $10,000 that I don't really want to put it in the market, and I don't know what I want to do with it, and a CD makes no money, a money market makes no money. What do you have? Marie had no idea. She called me up, we go over a couple of things, hook her up with Jeremy. Marie did her first one for $10,000. That a lot of money? It's a lot of money. Okay? When you do one for $10,000, now the possibility of a chargeback is not cheap. Only if they die in like the first 2 months or something. An annuity is a savings vehicle that you're going to share with people of the benefits. Would you all rather keep my money in a CD? And people think that when they go to the bank right around the corner from their house, that they give that person at the front counter a check for $25,000, and they think that $25,000 check converts into cash, and that $25,000 of cash goes and sits in the safety deposit vault with their money labeled on it, Jimmy Jones money. They think the money sits right there. So they feel when they go to the bank and they want that money out, the teller's going to go to the bank, pull out their $25,000 plus the interest they made, say, here's your money. It don't work that way. You know that. The money goes, and the insurance companies and the banks invest that money to make more money to where they can offer us an interest rate. On an annuity, you can get 10% of your money out every year. Doesn't matter what you want it for. It doesn't matter anything what you want it for is yours to get out. With a CD, if you take out money, you hit a little bit of a tax penalty. Okay, you hit an early withdrawal penalty. Now, if you want to get really jizzy about it and you really want to get better at it, is you get an annuity and you have it towards an immediate annuity. So they give you $100,000. They say that they want that money locked in for 10 years, and they want to get monthly payments on that money every month for 10 years. That can be done. An annuity also can be a lump sum put in there that will grow for as long as the client wants it for. Another one is that you can put money in and you can add money every month to it or every week to it, depending on what you want to do. So there's a lot of different versions of an annuity that you have and you should learn about. I can talk about it. I've given you some information about it. Now it's kind of like your job to go and learn more about it. Now, if you sit and think about an annuity, and the client says, well, I kind of want my money, I want to make sure I'm going to get it, you get 10% free withdrawal per year. Well, I'm really not too sure about the interest rates. How does it compare to a bank? Interest on an annuity is much higher than a CD, a savings account, or money market account. When your money sits in your CD and it rolls from year to year, at the end of the year, they send you a 1099. You got to pay income tax on it. When it comes to annuity, the money just rolls directly into the bucket of money, and you keep making interest on it. You get any bonus on a CD? No, you don't. You get a thank you from your bank teller. You get a thank you from the bank person you speak to. With us, we give you a thank you plus bonus. Depends on the company, depends on the bonus, depends on your age. Most companies have a bonus plan. Now with the bonus plan, that money is added straight to their annuity day one. So now they start making that money and interest on that money, whatever interest rates is available with that particular carrier. The most important thing for you guys to remember today is that it's called safety of principal. You have no downs when the market is down. Stock market is down, the bond market is down, the mutual funds are down. That does not affect your annuity, because the way the annuity is designed is to where it makes money, you get capped on what you make, which is a very generous amount. They keep the difference, and on the best side, if the market goes down, you suffer no losses. That's kind of hard for people to understand. They're saying, Joe, I don't know if I believe that there. Because you think about it, no matter who you are, when you make money, you're happy. When you lose money, you're sad. But people are used to making and losing. But when you talk about an annuity, so now you need to get some brochures from the companies that let you show the person exactly how it works. It's got the name of the company over there. It's got the name of the program you're going to work. Sometimes it's got their AM best rating. It's got a lot of, sometimes you've got history about the company. I want you guys to do some homework this week. Do some homework. Look up what an annuity is, how it works, the benefits, the upside, the downside. There's ups and downs to everything. I don't care what it is, okay? Learn this stuff. Get yourself familiar with it. So when you go into somebody's house, you can tap on safety of principal. Your money and your interest grows within the annuity, and you make interest on it. Everything that you make is all tax deferred until you take it out. So they can give you clean money out of their checking account, or if they got money with a broker, they got money at a 401k, you can do an exchange of that money, a 1035 exchange, take the money from there to your annuity, and that's usually pre-tax dollars. That's called qualified money. Qualified money is money that has not been taxed. Unqualified money is money that you've already got, taken out of your paycheck, you've already paid taxes on. All different ways for you to learn. Is it overwhelming? Guys, I'm just touching the iceberg for you just to kind of like get a little flavor, okay? Commission you make varies per carrier, so I'm not going to go over commission. But it varies by carrier, and varies by product, and varies by the client's age. Think about it. All you're doing is saying, I've got this money, write up a little contract with them, take that money, give it to the carrier, send your application in, and you make money. There's no underwriting. Chargebacks are slim. You will have one or two, depending on what the situation is. And it's easy and simple. Once you get a taste of what annuity can make you, I promise you're going to start learning more and speaking more about it. Well, Joe, I don't know much about it. Can we talk for about 6 weeks about it? Joe, I need to talk. Can I fly in from California? We talk about it for 4 days. Joe, before I feel comfortable, I got to talk to you about it. Well, not enough hours in the day for everybody to come talk to me about it. When you go online, you're going to see just what you have to say. A friend of mine who's a stockbroker from years and years ago said, Joe, the more you know, the more you tell. The more you tell, the less you sell. Okay? So the more you know about it, you can be harming yourself. Learn just the basic things about an annuity. That's all you got to know is the basic stuff. Throw the bait out there. When you throw the bait out there, from there you're going to come back the next day or the day after to do a little worksheet or do it there. You're going to get an illustration from the company. Now you're going to show them every single thing. They put in this much, bonus gives them this, projected income, guaranteed, projected income on the projected income on there. So to give you a little printout to where now you can show it to them. You don't have to know nothing. Joe, I got to study. I got to get new company cards now. Joe, I don't know what I'm going to do. Listen, just do it. Just start speaking about it. And when somebody says, give me more information, you can go to your little book, bring out a brochure, and say, this is what it's about. You're going to sit and say, I got like a little worksheet that I ran out of. I did one yesterday. I ran out. Can I make an appointment to come see you today at 5 or tomorrow at 2 o'clock? Then from there, Jeremy, Joe, I need help. I need help. We're in your corner. We're going to get in the trenches with you to help you make the sale. Okay. Learn about annuities. Go to Google, look up what annuities are. Look up the benefits of an annuity. Learn about an annuity. Start speaking about it, and you're going to add extra income to your checking account. Okay, guys, make it a great day. If you need anything, give us a call. We appreciate you and love you. Thank you. Bye-bye.